Welcome to the Opening Bell Report.
Okay, so let's unpack this.
Let's do it.
Usually, when we sit down to talk about the tech sector, we're stuck in the clouds.
And it's very abstract, yeah.
We're talking about the future of AI or the singularity, these massive concepts. Fun to debate, but, hard to actually pin down.
It's a lot of fun, but it's hard to know what to actually do with that information.
Exactly. But today, I want to ground us. I want to pull the camera way, way down and look at something incredibly tangible.
I'm with you.
We have this analysis report in front of us focusing on one company, AMD, and specifically one very peculiar, very powerful shape that's forming on their stock chart right now.
It is a fascinating setup. And you're right, this isn't about the vague promise of AI this time,
Right.
although that is definitely part of the engine here. This is about market mechanics. It's about a technical pattern that traders and analysts wait months, sometimes even years, to see develop properly.
We are talking about the cup and handle.
The classic cup and handle. It's one of the most reliable patterns in technical analysis if, and this is a big if
If you spot it correctly.
it's identified correctly, exactly.
Now, before you tune out thinking we're going to discuss kitchenware, the mission today is pretty specific. We're going to decode this pattern to understand what it tells us about market psychology, because that's really what a stock chart is, right? It's not just random lines. It's a map of human emotion,
There's fear, greed, hesitation.
all playing out in real time with millions of dollars on the line.
That is the best way to frame it. It's a seismograph for investor sentiment.
Yeah.
And for AMD specifically, this pattern tells the story of a massive, dramatic recovery. I mean, we are looking at how a stock claws its way back from the absolute depths of, what, $76?
All the way up to challenging its all-time highs.
It's incredible.
And we are right at the precipice. This isn't a history lesson. This is happening now.
Right now.
Let's get the immediate context from the analysis report. As we're doing this deep dive, AMD just closed at $249.80.
Which was a significant move in itself, by the way.
Huge. It was up over 7.7% in a single day.
Right.
And that puts it staring down the barrel of its 52-week high, which sits at 267.08.
So we are within striking distance of a major, major breakout.
We are right on the edge.
And that's why this is so timely. We aren't looking at a pattern in retrospect saying, oh, look what happened 3 years ago.
No, we're looking at it as the trigger is being pulled.
Precisely.
Okay, so let's back up and visualize this. For everyone, driving or at the gym right now, cup and handle. If I pull up an AMD chart, am I literally tracing the silhouette of a teacup?
Effectively, yes, you are. But the nuance, and this is where it gets really interesting, is in the shape of that cup.
Okay.
The analysis report really emphasizes that this isn't a V shape. It's not a crash followed by an instant violent pop straight back up.
It's a U shape.
It's a U shape, a grind.
Why does the letter matter? Why is a U better than a V here?
Because a V is often just volatility. It's panic selling followed by FOMO, panic buying.
It's unstable, emotional whiplash.
It's totally unstable. A U shape, the cup part of this, represents time. It represents a grind. It represents a changing of the guard in who owns the stock.
So walk us through that timeline. Because AMD didn't just appear at 250 yesterday.
No, this has been a journey. The report shows that AMD hit resistance around that 267 range a while back. It was flying high.
Right.
Then the bottom just fell out. It drifted all the way down to lower lows around $76.
That is a painful, painful drop. I mean, if you held through that, that's like a 70% haircut.
It's brutal.
That's the kind of drop that makes you question your entire life.
It washes people out. And that's actually necessary for the pattern. That's where the cup starts forming, the bottom of the U.
Okay.
This is where we get into what the report calls institutional accumulation.
Let's unpack that. Institutional accumulation.
Yeah.
Sounds like Wall Street jargon for big banks buying stuff.
It is, but it's how they buy that matters. Put yourself in the shoes of a huge hedge fund. You want to buy, say, $500 million worth of AMD.
Right.
You can't just log into your account and hit buy.
No, you'd blow up the order book. The
Yeah.
price would spike before you even filled 10% of your order.
Exactly. You'd get a terrible average price and you'd tip your hand to everyone. So you have to be sneaky. You accumulate. You buy a little bit, let the price settle, buy a little more. If it runs up too fast, you stop. You might even sell a little to push it back down. You do this over weeks, months.
And that creates that rounded bottom, that slow curve.
Precisely. That U shape is the visual footprint of big money slowly, methodically absorbing all the supply.
It's a war of attrition.
It is. You have the bears, the people betting it'll stay down selling their shares, and you have the bulls, the institutions, standing there with a catcher's mitt just saying, I'll take that, and that, and that.
So the fact that it took so long, that slow grind back up from 76 to the 240s,
Right.
that's actually a sign of strength.
It suggests stability. It implies the selling pressure has been thoroughly exhausted.
The bears have run out of ammo.
Everyone who wanted to panic sell has already sold. The weak hands are gone from that phase.
Which brings us to the second and arguably most frustrating part of the pattern. We've done the hard work. Climbed the mountain from 76 back up to the 230s. We're ready to break records. And then we stop.
The handle.
The handle. The stock just stalls out. Why? If everyone's buying, why doesn't it just push through the ceiling?
This is one of those counterintuitive things. The handle is a pause, a sideways drift, or even a slight dip. The report points out that just recently, before this big 249 jump, AMD just chopped around in the 230s.
It felt like it was stuck in mud. I remember looking at it and thinking, come on, do something.
It was consolidating, and the report calls this phase a shakeout.
A shakeout. Sounds aggressive. Who's being shaken out?
The weak hands. And that's not an insult, it's just a market term for conviction.
Define it for us. Who are these people?
Okay, imagine you bought AMD way back at, say, $100, or maybe $180 on the way up. You're sitting on a nice profit now at $230. But you remember the trauma of the drop to 76. You're nervous.
I'm looking at it struggle at 230, and I'm thinking, I should just take my money and run before it crashes again.
Exactly. Nobody ever went broke taking a profit.
Or what if you bought at the last peak? At 260.
Even better example. You've been underwater for months, losing money. Finally, it's climbing back toward 240. You're thinking, thank God I can just sell, minimize my loss, and get off this ride.
Just get me out of this trade with my shirt on.
So the handle is the market testing everyone's resolve. It drifts lower or goes sideways on lighter volume. It's boring. It's discouraging. It clears out the people who aren't committed.
So the handle is basically the market asking, are you sure you want to be here for the next leg up?
Yes. And once those sellers are gone, once that supply dries up,
Who's left?
only the people who aren't selling, the strongholders. And that is when the rocket ignites, because there's no resistance left to hold it down.
Which brings us to the trigger event in the report. That plus 7.71% move to 249.80.
That wasn't just a random good day. In the context of this pattern, that was the signal. That was the breakout from the handle.
The shakeout was over.
The weak hands were flushed, and the volume started flooding in.
It's like the cork popping off a champagne bottle.
Perfect analogy. The buying pressure could no longer be contained.
Okay, so we have the mechanics down. Cup, handle, breakout. But I have to play devil's advocate here. Is this just financial astrology?
The million-dollar question.
I mean, we're drawing a T-set on a chart and predicting the future. Is there anything real fueling this, or is it just self-fulfilling because everyone sees the same lines?
And honestly, it can be self-fulfilling. If enough people see the cup and handle, they buy, which makes it work. But the most powerful moves, the ones that really sustain themselves, happen when the technicals align with the fundamentals.
When the chart agrees with the business reality.
Right. And this analysis report highlights a fundamental catalyst. The actual fuel for the fire. It's not just lines.
So what's the story? Why now for AMD?
Two things. First, the calendar. Earnings are coming up on February 3rd.
So there's anticipation,
Huh?
people placing bets.
Correct. But more importantly, it's the product cycle. The launch of the new AI chips, the MI350 series.
Ah, the AI narrative. We can't escape it.
In this market, you really can't. But here's the nuance that I think many people miss, and the report breaks this down so well. It looks at the valuation, specifically the PE ratio, price to earnings.
Okay, let's unpack this quick. For anyone who doesn't stare at terminals all day, what are we looking at?
Simply put, PE is how much you pay for every dollar of profit the company makes.
Got it.
Well, if you look at the trailing PE based on money they actually made in the past year, it's sitting at 123.
Whoa, 123x. That sounds incredibly expensive.
Dude, sounds insane.
I mean, if I was buying a lemonade stand and you said I had to pay $123 to get $1 back every year, I'd walk away.
You'd laugh, right? And value investors would scream at that number. But the market is a forward-looking machine. It doesn't use the rearview mirror.
Okay.
The report contrasts this with the forward PE.
Which is based on what analysts think they will earn next year.
Exactly. And the forward PE is only 37.
That is a massive discrepancy, 123 versus 37.
It's huge.
So the market is expecting earnings to basically triple.
Or more. That gap tells you exactly what the smart money is thinking. They aren't buying AMD for last year. They're buying it for the harvest. They are pricing in a massive explosion in revenue from these new AI chips.
So the cup and handle on the chart is the visual representation of investors shifting their focus from the expensive past to the profitable future.
That's the logic. The technical pattern shows us when to pay attention. The fundamentals, that PE gap, tell us why.
It synthesizes really well. Okay, let's get back to the chart. I want to know where the landmines are. We've had the breakout. We're feeling good. But what are the critical levels?
The report identifies a very clear ceiling and a floor. Let's start with the ceiling, the resistance. That is $267.08.
The 52-week high.
That is the boss battle. That is the number to beat.
Why is that number so tough? Is it just psychological?
Partially, but it's also structural. Remember those bag holders we talked about? The people who bought at the top.
Right, the ones waiting to break even.
There are likely still people holding AMD who bought at 265 or 267 a year ago. For the last 12 months, every time they looked at their portfolio, they saw red.
They've just been praying to get their money back.
Just let me get back to break even so I can sell. And as the price gets close to 267, those people start hitting the sell button.
Creating a wall of selling pressure.
Exactly. It's the ghost of the last rally.
But the report uses a phrase I love here, blue sky territory.
It's a great term.
What happens if we break 267?
If we break cleanly above 267.08, something magical happens. There is no historical resistance left. There are no bag holders.
Because everyone's in profit.
Every single person holding a share of AMD is making money. There is no one looking to get out to break even.
So the supply of sellers just evaporates.
It drops dramatically.
Right.
And that allows the price to run much faster. That's blue sky territory. There are no clouds overhead. It's pure price discovery.
That sounds exciting, but we have to look at the downside. What's the trap? What's the floor?
The report pegs critical support at $235.
235. Okay, why that number?
Think about the handle we just broke out of. We were stuck in the 230s. We popped up to 249. We need to hold those gains.
Right.
If the price drops back down below that breakout point, specifically below 235, the report warns of a fake out.
A fake out. A bull trap.
It's painful. It means the buyers showed up, pushed it up, but couldn't hold the line. If it drops back into the 230s, the breakout failed. The whole cup and handle pattern might be invalid.
So my eyes are glued to 267 on the upside, and I'm nervously watching 235 on the downside.
That's your playing field. As long as we stay above 235, the pattern is active.
Okay. Now, the part everyone tunes in for. The forecast. If this plays out, if we break into the blue sky, where are we going?
They do give numbers, and surprisingly, it's based on geometry, not just guessing.
Geometry. How do you use geometry to predict a stock price?
You measure the pattern. To get a target, analysts literally measure the depth.
Wait, really? How does that work?
So for the short term, the conservative target, they measure the depth of the handle, that little dip before the breakout.
Okay.
They take that dollar amount and add it to the breakout price. Based on that, the report projects a target of $285.
$285. That's a decent chunk from here. A 14% move.
It is. That's the easy move, theoretically. But if you take the aggressive target, the longer-term 6 to 12-month view, you measure the depth of the entire cup.
From the rim all the way to the bottom.
Right. Remember, we went from the 260s down to 76. That is a massive, deep cup.
That's nearly a $200 spread.
Exactly. So if you project that depth upwards from the breakout, the theory says the stock has the stored energy to replicate that move. The report gives a target of $310 or even more.
310. Wow, that puts AMD in a completely different weight class.
It's a very bullish projection. But I have to stress this, and the report does too. None of this happens without confirmation.
A mental call to action. You can't just buy blindly.
No, you need to be watching for a daily candle close above 267.
Why does the close matter? Why isn't it enough if it just touches it during the day?
Because intraday moves can be noise. Algorithms triggering. A close above that level means the buyers held ground until the closing bell. It shows conviction. That confirms the door to 300 is actually open.
So let's recap this journey, because it really is a narrative.
It's a story of redemption.
We started in the depths of $76, the dark days. Then the cup, that long, slow grind of institutional accumulation.
Then the handle, the shakeout that scared off the nervous investors one last time.
And now, the breakout. Fueled by the promise of AI, confirmed by that forward PE data, and pushing right up against the final barrier at 267.
It connects the technicals to the fundamentals beautifully.
It really changes how you look at a screen full of numbers.
Yeah.
And you stop just reacting. You stop seeing green and red as random events. You start seeing the battle.
It contextualizes the chaos.
Exactly. It makes the market feel less like a casino and more like a very complex, high-stakes strategy game.
A game played with human psychology.
Which brings us to the end. And I want to leave you with a thought. We always talk about smart money and rational investing. We look at spreadsheets, PE ratios, chip architecture.
We try to be logical. We want to believe it's a science.
We do. But patterns like the cup and handle prove the market is just as much about human emotion, fear, hesitation, greed, all playing out in real time.
It's mapped emotion. That's all it is.
Right. So here's the question I want you to walk away with. If AMD breaks that 267 barrier and enters blue sky territory, does the psychology shift? We've been in recovery mode for months, grinding, fighting.
Surviving.
If we break out into the clear blue sky, do we shift from recovery to euphoria? And if the market enters a state of euphoria, what does that mean for the smart investor? When everyone else is celebrating the blue skies, is that the moment you should be the most careful?
That is the ultimate question. The higher you fly.
Something to think about.
Right.
Thanks for diving in with us. We'll catch you on the next one.
Don't forget to like, share, and subscribe for more.